Welcome to the Apple earnings, just coming up very, very shortly right now. This is the countdown for the official earnings. We'll be there. You'll be with us live as it happens. We're trading the stock. We're watching the stock. We're keeping an eye on everything. We want to, if we can, if it drops, we'll buy some more. If it goes up, we'll do absolutely nothing. I'll hold my position. I've already trimmed off the top. So that's all looking good to me, and I'm very happy. This is the Apple earnings. We're ready to go. We've got everything in place. I've taken a bite out of Apple. I already have my profits taken and secured away, and I can tell you now that Amazon and Google is out as well, and we will look at that as well. We're looking to buy some Google and some Amazon as well. So we trimmed off our Amazon as well. So that's coming up tonight. We've got the earnings. I'll be right with you, right back in just a few minutes' time. Leave your comments on the screen. Get ready for an explosive night. The markets are doing well, and we'll answer all your questions. I'll see you back in just a couple of minutes' time. Don't go away. Okay, we are watching the Amazon earnings. As you can see, it's the Apple earnings, I apologize. The Apple earnings, we're also keeping our eye very closely on the other stocks as well. Amazon and Google, all related to tonight. Oh, there we go, we've gone down. That's why we trimmed off. And Apple, I would expect to have missed on earnings. Wouldn't surprise me. Apple reports first earnings miss in nearly 7 years. No surprise. That's why we trimmed off. Okay, this is great news. Great news, because now we can buy it back cheaper. Okay, big miss. No surprise. It was obvious. I said it as clear as day. In fact, we're going to end the music right now. I said that was going to be a miss. The expectations were so high. It was insane. Apple reports first miss in 7 years. Epic, 188 versus 194. It was the analysts. They gave too big a expectation. No surprise. No surprise there. No surprise at all. That shouldn't come as a surprise to anyone. I said it clearly that was going to happen, and it has. So we've got some money on hand. We took some profits. We trimmed off the top, and there she goes. So Amazon at the moment. Let's have a look. I'm looking at it, and we'll refresh Amazon and Google. That's what we're looking for. These are the stocks that we want to buy back. Google is going up, but Apple is going down. This presents me with a great opportunity. We're down 1% now. I can buy this all back in again. Lovely. I wanted to go down 3, 4, 5% before I do that, though. I will tell you that now. There's no point buying it in here. Let's get some big money out of it first. It's no surprise. If we look at it, this is why it missed. And to be fair, this isn't fair on Apple, but that's what, how it goes. When you're the biggest company in the world, you expect. Look, the analysts set that. There was no way. I said over and over again, they will never make that target. And because they haven't, they've missed. The stock price is going down. So if you did the right thing, you trimmed off the top like I did, and now you're going to buy it back cheaper. But I've got a big enough position in Apple. It's still flat. I'm still on it. Still got an okay, reasonable dividend. Not much, but it is free money at the end of the day. If it goes down 2, 3, 4, it's got to go down. I've already made my money on it today. It's got to go down, 5% before I pick up anything else. There's really no point in just buying it for a few dollars like this. Let's get it to go down much lower. Okay, so there's that. We're looking at Amazon as well. Amazon estimated 17. They did 3, so they missed as well. Amazon missed on earnings as well, quite a bit as well. I'm looking at that now. We are up 7.5% on Amazon. We've already trimmed off. We've already taken profit, so that's okay. I've got money to buy back there, but that's not gone cheap enough. This will help drive down McDonald's and Coca-Cola, which are both down a little bit. I'm looking at those right now. Johnson & Johnson is going up. There's your staple. Surprise, surprise. Google is going up now. So what I'm looking to do is buy some Google. Google also missed on earnings. No surprise. This is exactly what Jerome Powell wants. The economy is slowing down. This is good news. Bad news is good news. At least it is if you trimmed off the top. If you didn't and you sat there and thought it could go on forever, then of course, then you're feeling the pain. But if all day long I've been banging on taking the profits, if you took the profits, then you are winning right now. You are loving this. You want it to go down. If you trimmed off the top, it's exactly what you want. Just going live now on TikTok. Let's bring in Live Streamer Cafe as well. Let's start the show over there as well. There you go. We're now live on Live Streamer Cafe as well. Earnings tonight, it's gone exactly the way we wanted it to. Nothing goes up forever. No fanboys here. We're just making money, right? Let's have a look. I 3,000 to invest. Recommendations on what to buy. Thanks. John Micklewayne. Well, I'm looking at it now. I'm going to do it with my own money. I've got nearly $2,000. Well, 1,600 now to spend. A good time to leave message on Discord. Apple, wow, down a lot. Yeah, thank you. Below 139, we'll buy some Apple. What you think about Bristol Myers? I have no idea who Bristol Myers is. Aim to score, no idea who that is. Never seen you before in the show. I reply to everyone's comments, but I don't know who you are and I don't know who that is, so I can't comment. Okay, let's have a look. Google. Looking at Google right now on the screen. We're keeping Apple on the screen, of course. It's an Apple earnings, but I am looking at Google. Google, basically everyone's missed, right? Everyone's missed. Estimated 120. They got 105 for Google. I thought they'd have done a bit better than that, but nevertheless, they've come in a miss. In fact, it's about the same as last quarter. Remember I said the income was going up on YouTube? It is, and they're pretty much the same as last quarter. So I can tell you that looking at the screen right now. Okay, so Google. This is great. I'm so happy that I've got some money off the top. So Google, I'm looking to buy. It's not low enough. J&J still going up. Coca-Cola still going up now. McDonald's going sideways. Amazon, I'm still up 7%. Not gone low enough yet. So Apple is returning. It's back in the green again. Yep, I'm back in the green again. Apple. I'm so happy that this has gone like this. This is really, really great. It's gone exactly the way I wanted it to. So there we go. We can play this perfectly now. We've got money to spend and we can buy the dips. And tomorrow, when the markets are down, we'll be up because we'll be buying the lower prices. So we'll be up. Great. Fantastic. Apple sales dropped 5% in largest quarterly revenue decline since. It's no brainer. No one was buying an O for iPhone 14. Aim to score. I have no idea. I can't cover that one tonight. I'm covering Apple, Amazon, and Google, and our main show, of course, is Apple. That's what we're covering tonight. So all looking good. Everybody over there on TikTok, if we get 100 likes in the video, we'll give away a cash prize on the show. So if you've just tuned in, click subscribe to the show and smash the like button. And if we get 100 likes, we've got 30 watching and 9 likes. So smash the like button, guys. And if you do that and we get 100 likes, we'll give away a cash prize, the money I make. In fact, more than the money I make in the video. I want to help people. I'm here to help support people. But all you've got to do is smash the like button, okay? That's all you've got to do. Ford lost $2 billion. Of course they have. They're losing on every one of their cars. Every car they sell now, every EV they sell, they lose money. No surprise. This is great for the economy, great for the markets. If we see everyone failing like this, then the Fed they've won. If they see all the markets, all the companies selling less, it's perfect. This is what we want. Bad news is good news right now. There's 13 likes now. Smash the like button. And once we get to 100, we'll give away a cash prize. Okay, we've got 15 minutes before, just over 20 minutes before the earnings begins. Thank you very much indeed. How many people have come through the show so far? Just started with 44. Okie dokie. Keep it going. Apple, we're looking for bar. Oh, here we go. We've got the... So I've got the earning results now coming up. So that's good to see. It's live streaming. Let me just mute that a minute. Live streaming. Excellent. I'm looking in Apple's results. We've got it on the screen. So I will bring that to you in a few moments' time. This is very good, very exciting stuff. Is everybody else in a good position right now? Is everybody else happy with this? Did everyone else trim off the top, take their profits? Fantastic. If you want to join us on Discord and see all our trades before I make them in my own premium service, there is my Discord server. If you go at the top left-hand corner, I've got a premium service, which I share my trades before I make them. If you want to support the Discord channel, you can. There it is. I think it's like $2 a month. It is, something like that. The actual server is free. Anyway, Apple. So, let's have another look. We're looking across the board. Joggly Vega just subscribed. Thank you very much indeed. Okay, my overall portfolio is still up 1% today. It's still strong. The VIX is climbing again. 22 would tell you that means we're about to lose some ground again. Salvatore Broccolini play hard to little get. Play hard to little get. I'm not sure what that means. Oh, you're talking to a guy. Oh, I see. We got a guy called Salvatore Broccolini. Oh, I see. You're having a conversation. Right, I see that. I didn't see that. All right. So the S&P is holding up. It's down slightly in the after hours, but I'm up today very comfortably. Virgin Galactic is down 2.33% in the after hours. Not an issue. Still up. A good way. Tesla is coming back down. Oh, only 3% now. Might be able to buy Tesla soon. It's an obscure joke, Martin. You won't get it. No, I won't get it. You're absolutely right. 22. Apple is down at the moment. It's not cheap enough for me to buy more. Amazon is up 7.38 still. Not cheap enough for me to buy any more. McDonald's is going down. It's got a long way to go yet. Coca-Cola, it's still not cheap enough for me. J&J, Google. I'm watching all these stocks right now. Microsoft is running away with it. Tilray is down. Not buying any more there. Robinhood is just moving down. Rio is going sideways. I'm looking at all my stocks. Meta, down 1.6. Nothing yet for me to buy. Okay. We're just 15 minutes away from the earnings to begin. I asked all my members, if you are a member only, you can ask me what assets you want in the ticker, and I'm going to upgrade that over the next few days with all of your comments, all of your favorite tickers. It's for members only, so if you want that, just go to the community tab on YouTube and leave me your reply to the comment at the top, and I will add your your assets to the ticker. Okay, we're just 15 minutes to go before the call starts, and if you've just tuned in, click subscribe and ring the bell, smash the like button. If you smash the like button and we get 100 likes in the stream, we'll give away a cash prize, the money I make on the show. Okay. Looking good. Waiting for the Apple earnings to begin. Just 15 minutes to go. It's all about what they say afterwards and what their projections are like. So we're looking to buy some something tonight. I don't have to buy anything. My portfolio is on fire. It's up to 41,996. So my portfolio is very, very strong. I'm not looking to buy anything, but I do have some money now if I see there are some major discounts. We trimmed off Amazon. We knew this was coming. We trimmed off Apple. We knew this was coming. So it all played up perfectly. It rose into the earnings. So that's what we're waiting to do. Okay. We're coming up to our first commercial break. We'll see you back in 10 seconds from now. Here we go. If you see an ad now, you can skip it. I'll be right back in just a few seconds' time. Here comes the commercial break. None farms tomorrow morning before the open. Thank you very much indeed, 22. Cash is king. There is bigger dips coming soon. Too many buy-up days. Too many up days. Yep. Well, I am happy. I've got a much better feeling about this year than last year. I think I'm doing a better job this year. Charles Benton, do you think Apple will rise during earnings like Tesla? No, I doubt it. To be perfectly honest, I think it could go lower. If I'm perfectly honest, that's the point of already being in the stock, right? You can play it perfectly, because if you're already in the stock, you can trim when it goes up, you can buy when it goes down. If you're not in the stock, then it's kind of like, oh, I haven't made any money yet from it. So if I buy here and then you lose money, nothing worse. So if it goes up, I've got a very strong position. I'm not buying anything if it goes up. I've already got enough. If it goes down, however, by 5 to 10%, I'll buy some more. Do you see Apple, Google, Microsoft, and so on to go up or down in February, March? I think this is a bear market rally. I think we're going to see sell-offs. If you've played it right, you've taken money off the top, you've got money to spend now, free money if you like, to buy the dips. I don't think the bull market is going to start in any shape or form until late spring, early summer, at the earliest. So we can't run forever. No, we've had like a month now of a bear market rally, and now we're going to get sell-offs, and that's exactly what we want. It's what we want. I mean, you've had the opportunity to run up for a month. You've made a lot of money. You take off and then you buy it back. Sensible, right? Sensible in a bear market rally. It's obviously the right thing to do. But you don't have to sell all of it. Just trim it off. Take some profits off the table and then buy it back when it goes down lower. If it doesn't go back down lower, find something else that has. Which is exactly what I did today. I took money off Amazon. I ended up buying Next Era Energy. And that worked out for me really great. I also bought Virgin Orbit, which also worked out great. So there's always a bull market, like Jim Cramer says. He's right there. Doesn't say a lot of things I agree with, but I agree with there's a bull market somewhere. Not quite sure what Salvatore's on about. If you're investing in the stock market, you do care about the earnings. What's the point otherwise? You can't make any money if you can't read the earnings. It's like driving a car without reading a map. I mean, this is what gives you direction. This is what tells you where we're going. If you who cares about the earnings? Well, then you're not an investor, are you? You're a speculative gambler. I don't gamble. I listen to the CEO. I listen to the company. I read the balance sheet, and I make calm, rational, relaxed decisions based upon the earnings. The earnings is what sets me up. The earnings is what I'm listening to, is the next 3 months of direction of the stock market. Anyone who says, who cares about the earnings, is not an investor. They're a speculative gambler. And we all know what happens to gamblers. Lose all your money, unless you get lucky. Well, it's not about luck, really. Right, McDonald's is now, I like McDonald's, it's making money. See, we don't want to sell all our Apple. It's good that we've still got, we've got a really good position in Apple. You can see, if I share with you, look, I've still got $4,000. It's like 11.5% of my portfolio. What did, let's have a look. We've got a comment back here from Salvatore. Just got $5 for gas from my brother. All right, Salvatore. Thanks for ever so much for coming in. I think you're wrong though about the earnings. But anyway, Coca-Cola. There's issues with Coke coming up in the next few months as well. So you want to get some Coke. For me anyway, I'm adding to my position. I've got a strong position on my Roth. I want to get more. J&J looking very strong today. Google going sideways. It's had a bit of a sell-off. I'm still up 18.5% on Google. I bought it at $88 when it was like free. Microsoft up 8%. That's not being affected. Tilray, I've got enough. Robinhood still going down. Rio Tinto for the dividend, still too expensive. Meta, still too expensive. 14 times earnings, it's pretty good, but I'm not going to buy it at this price. No, thank you. Microsoft, Google. I'm bashing between all of these. I don't need to buy anything tonight, actually. I mean, I could wait and be patient. If nothing presents itself to me, then I just won't buy anything. I'm not just going to buy it for the sake of it. I don't mind having the money sat there earning 4%. From Amazon, from Apple, from Robinhood. It's when I can make more money from the stocks is when I buy it. Amazon is recovered a bit. It's down, but I'm still up 9%, so that's okay. It's what they say in the next few minutes. Obviously, Amazon and Google are already talking. They're already talking. That's why I'm watching. That's why I'm watching Amazon and Google right now. They're talking, so I'm watching the reactions, and they're holding up. Amazon has come back. Google has come back. That's interesting, actually, that they've come back. Not all the way back, but they're doing all right. Apple is coming back as well, as we can see. So it's all about the next few months. If they say we've had a bad month, we've had a bad quarter, but we do see things improving, that's when the stock will rally. However, Tesla is going down as we're watching it. I want to buy Tesla. S&P is going back up again. Yeah, my overall portfolio is going up again. I'm 1.52 up today. Yeah, looking good. So really, at the moment, I'm just sitting, waiting. There's nothing presenting itself to me. Coke, I want for $58. It's $60 at the moment. I'm hoping that will go. McDonald's, it's going. It's gone down a couple of percent, but it's still up 1% too high. I got 76 shares of Apple, and you're holding. Okay. I've got 28 shares of Apple at the moment, and I'm happy with that. I'm definitely holding that. Charles Benting, goodness, says Charles. How old are you, Stephen? He's 99 years old. He's a right old bugger. Amazon, McDonald's, Coke, 63. 63. See? Old. He's nearly as old as me. Microsoft. Charles Benting. I'm 18. There you go. Charles Benton. He's just starting out. I remember being 18. Anybody remember that? I remember being 18. I had loads of hair and everything. Mike, but no, you're not the youngest here. Our youngest investor is Caden Youngquist, CY Financials. He's a YouTuber, and he runs his own show, and he's 17 years of age. And he's doing very well. British kid, thank you very much indeed. Lucid, we're not talking Lucid tonight. This is the Apple earnings. And we had Lucid yesterday, and a lot of fun with Lucid. I've been Lucid bear hunting today. All the fanboys all over Lucid telling me I'm stupid because I sold when I was 150% up. It's like, really? Yeah. But it's a great car. I said, yeah. It's a great cup of coffee as well. But I mean, at the end of the day, I sell it if it makes money. I'm here to make money, right? I mean, that's it. It's very simple what I do. I just want to make money and grow the best YouTube channel in the world. That's what I work 10 hours a day to do. I'm not interested in if it's the best car or not. Does the company make money? No, they lose money on every car they sell, like Ford. They lose money on every car. So as an investor, that doesn't make any sense. So when it pops up on a rumor, I sell it and I'm done and I'm out the door. And it will go back down again. And when it goes back down again, I'll buy it. And if someone says it won't go back down again, it's going to go to $1 million, that's fine. You ride it up. And you sit on the edge of a precipice with a stock that's worth a fraction of what you've paid for it. That's fine. That doesn't bother. I mean, I'm not doing that. I'll just buy a stock that is. There's plenty of things to buy to make money on. You haven't got to buy everything. Everyone gets like, you got to buy everything. Why? You're 54. Yeah, I think, I'm 54 on March. Is it 54 on March the 9th? March the 9th is my birthday. I think I'm 54. Am I 50? Leah? Am I 53 or 54? I can't hear her. I think I'm 53. I think I'll be 54 in March. I don't know. How old am I? Does anyone care? Amazon's going back up. That's good. 53. I was born in 1969. I'm 53, right? So I'll be 54 in March. Thanks, Stephen, for telling me. I don't bloody know. Right, okay. Just a few minutes ago now. Oh, my God. Yeah. I don't know how old I am. I think you should know, shouldn't you? I think it should be something in your life that you should know yourself. I think, when someone says, how old are you? I think you should know the answer to that question. Not like, I haven't got a clue. I don't know how old I am. Anyway, the Apple earnings just a few moments to go. A few moments to go. We're looking at the chart. We're looking at everything. This is the Apple earnings, the official Apple earnings. Tim Cook rings me up and says, Martyn, can you put it on? Because we've seen your studio. We know that you've got the best studio in the world. And I go, yeah, I know. I've got the best studio in the world. And that's why you want to put it on here. And he says, yeah, that's right. So go ahead, stream it. Make sure that it looks good. And I go, all right. Make sure you send me a good link then, right? Don't send me any rubbish. And anyway. Apple earnings. Here we are. Ready to rock and roll. Apple earnings. Just a few moments away. 3 minutes, in fact, to the Apple earnings. And we are ready. We are ready to rock and roll. Watching the stock. We're also watching Amazon and Google as well, because we want to make money on both of those with the money that we've trimmed off the top from Apple. Boy, I'm glad I did. And no surprise, though, that estimation was so far-fetched, so ridiculous. It's unfair to Apple, really. Remember, it's not what Apple said they're going to earn. It's what the analysts said they're going to earn. This is why this whole market, this whole thing is a game, and you've just got to play the game because it makes no sense whatsoever. The analysts said they're going to earn that. Apple didn't say they're going to earn that. But they're a public traded company. We get all the figures. Right, 2 minutes ago, quick ad. Skip the ad. I'll be right back. I was born 1959. I was born 1969. Hey, Stephen Lewandowski, love it. I bought a Cornish mining stock today, supporting locals. I love that idea. I want a Cornish mining stock. Andrew Grady, I want a Cornish mining stock as well. Right, here we go. It's showtime, okay? The clock's up, okay? We're about to begin the earnings. Okay? So here we go. We're going to cue in now. We're going to bring it up for you. You ready? Here we go. Thank you for the subscription. Appreciate it very much indeed. Right, they're just streaming music right now. We've got a minute and a half to go. There's not much to see. I'll bring it to you as soon as it comes, but we are watching Apple. We are trying to make some money from it as well. What do they mine, Andrew? They mind your own business. Hey, you like that? There's a good one. You like that one? That's all right, wasn't it? They mind your... TUN. Is that the name of it, is it? They mind your own business. Okay, here we go. We're getting ready now for the Apple earnings. Just a few moments' time. Here we go. We're watching the stock very, very closely. We're also 1 minute to go. Amazon is going back up. I trimmed it. I'm happy I did, but good to remain in it. Coca-Cola, we want to buy it. McDonald's, we want to buy it. It's not quite low enough yet. And Google, we want to buy some more, but not yet. All right, let's go back over to Apple then. 20 seconds to go. Let's listen in. Apple earnings, seconds away. Are you ready? We'll keep our eye on the stock. This is the Apple earnings. Tim Cook and all the boys and all the girls ready to rock and roll. Let's get ready to go. Here we go. And we're listening in. The moment it comes up, I will play it for you. All right, so we're listening in right now. It's gone 4 o'clock. Any second now, we'll have the Apple's earnings. So we'll bring it to you in just a few seconds. And any moment now. Here we go. Apple earnings.
Good day, everyone, and welcome to the Apple Q1 Fiscal Year 2023 Earnings Conference Call. Today's call is being recorded. And now at this time, for opening remarks and introductions, I would like to turn the call over to Tejas Gala, Director of Investor Relations and Corporate Finance. Please go ahead.
Thank you. Speaking first today is Apple CEO Tim Cook, and he'll be followed by CFO Luca Maestri. After that, we'll open the call to questions from analysts. Before turning the call over to Tim, I would like to remind everyone that the December quarter spanned 14 weeks, while the March quarter, as usual, has 13 weeks. Please note that some of the information you'll hear during our discussion today will consist of forward-looking statements, including, without limitation, those regarding revenue, gross margin, operating expenses, other income and expense, taxes, capital allocation, and the future business outlook, including the potential impact of COVID-19 on the company's business and results of operations. These statements involve risks and uncertainties that may cause actual results or trends to differ materially from our forecast. For more information, please refer to the risk factors discussed in Apple's most recently filed annual report on Form 10-K and the Form 8-K filed with the SEC today, along with the associated press release. Apple assumes no obligation to update any forward-looking statements or information, which speak as of their respective dates. I'd now like to turn the call over to Tim for introductory remarks.
Thank you, Tejas. Good afternoon, everyone, and thanks for joining us. Today, we're reporting revenue of $117.2 billion for the December quarter. We set all-time revenue records in a number of markets, including Canada, Indonesia, Mexico, Spain, Turkey, and Vietnam, along with quarterly records in Brazil and India. As a result of a challenging environment, our revenue was down 5% year over year. But I'm proud of the way we have navigated circumstances seen and unforeseen over the past several years, and I remain incredibly confident in our team, in our mission, and in the work we do every day. Let me discuss the three factors that impacted our revenue performance during the quarter. The first was foreign exchange headwinds, which had a nearly 800 basis point impact. On a constant currency basis, we grew year over year and would have grown in the vast majority of the markets we track. The second factor, which we described in a November 6th update, was COVID-19 related challenges, which significantly impacted the supply of iPhone 14 Pro and iPhone 14 Pro Max and lasted through most of December. Because of these constraints, we had significantly less iPhone 14 Pro and iPhone 14 Pro Max supply than we planned, causing ship times to extend far beyond what we had anticipated. As we always have every step of the way throughout the pandemic, we continued to prioritize people and worked with our suppliers to ensure the health and safety of every worker. Production is now back where we want it to be. The third factor was a challenging macroeconomic environment as the world continues to face unprecedented circumstances, from inflation to war in Eastern Europe to the enduring impacts of the pandemic. And we know that Apple is not immune to it. But whatever conditions we face, our approach is always the same. We are thoughtful and deliberate. We manage for the long term. We adapt quickly to circumstances outside our control while delivering with excellence in the things we can. We invest in innovation, in people, and in the positive difference we can make in the world. And we do it all to provide our customers with technology that will enrich their lives and help unlock their full creative potential. It's a wonderful thing to be a part of, and it's so rewarding for all of us at Apple when we hear how much our customers are loving what we create. Let me talk now about what we saw across our product categories. Starting with iPhone, revenue came in at $65.8 billion for the quarter, down 8% year over year. However, on a constant currency basis, iPhone revenue was roughly flat. Our customers continue to rave about the astounding camera capabilities and unprecedented battery life and the groundbreaking suite of health and safety features. The iPhone 14 lineup pushes the limits of what users can do with a smartphone. During the quarter, Mac revenue came in at $7.7 billion, which was in line with what we had expected. We had a difficult compare because this time last year we had the extremely successful launch of the redesigned M1 MacBook Pros. We also faced a challenging macroeconomic environment and foreign exchange headwinds. We remain confident in and focused on the long-term opportunity for Mac. Just last month, we introduced new MacBook Pro models powered by our latest developments in Apple Silicon, M2 Pro and M2 Max. These chips enable unprecedented performance and do so with less energy, which is not only good for the environment, but gives the newest MacBook Pro the longest battery life ever in a Mac. We also introduced the M2-powered Mac Mini, which will supercharge productivity for users of all kinds and leave them stunned by just how powerful a Mac Mini can be. During the quarter, iPad revenue grew 30% to a total of $9.4 billion. The very strong growth was due in part to a favorable compare to the December quarter a year ago when we experienced significant supply constraints. Customers continue to praise our new lineup for its versatility, whether it's the new iPad Pro, now powered by the M2, or the newly designed iPad 10th generation with its stunning liquid retina display and beautiful colors. Revenue for wearables, home, and accessories was $13.5 billion, which was down 8% year over year, driven by foreign exchange headwinds and a challenging macroeconomic environment. We remain excited about the long-term opportunity in the category. As an example, a few weeks ago, we announced the next generation HomePod, which is an indispensable addition to the smart home. This powerful smart speaker relies on advanced computational audio to produce an incredible listening experience. We're also helping users make their homes safer with sound recognition. This feature, arriving later this spring, allows HomePod to send a notification directly to a user's iPhone if a smoke or carbon monoxide alarm sound is identified. We continue to hear wide praise for Apple Watch Series 8 and Apple Watch Ultra, which has set a new standard for what's possible with a wearable. From a whole host of health and safety features to incredible new capabilities for extreme athletes, there is something for everyone in these amazing products. Customers are excited about some phenomenal new features we've made available across many of our products as well. One of the highlights is Emergency SOS via satellite, which launched for iPhone 14 customers in the US and Canada in November, and for customers in France, Germany, Ireland, and the UK in December. This is a feature we hope our users will never need, but it is incredibly heartening to get emails from people describing the life-saving impact our new safety features have had on them. We're always looking for new ways to empower people to create and collaborate. In December, we released Freeform, a brand new app that lets users take their ideas wherever they want, anywhere they are, all while collaborating in real time. Freeform has already received praise from reviewers for its flexibility and simplicity as it works seamlessly across iPhone, iPad, and Mac. Today, we are very excited to announce that we've achieved a truly incredible milestone. Thanks to our deep commitment to innovation, incredible customer loyalty and satisfaction, and a large number of switchers, we now have more than 2 billion active devices as part of our growing installed base, double what it was just 7 years ago. This is an incredible testament to our products and services and the strength of our ecosystem. We set an all-time revenue record of $20.8 billion in services, which was better than what we had expected. We achieved double-digit revenue growth from App Store subscriptions and set all-time revenue records across a number of categories, including cloud and payment services. All told, Apple now has more than 935 million paid subscriptions. Apple has also just begun a historic 10-year partnership with Major League Soccer. Just yesterday, we launched MLS Season Pass, which will give fans in more than 100 countries access to every live MLS regular season game, as well as the playoffs and MLS Cup, all with no blackouts. And while we're providing more content to sports fans than ever before, Apple TV Plus continues to showcase powerful characters and moving storytelling. We were thrilled to celebrate the holidays alongside our Apple TV Plus subscribers with the hit movie Spirited, and we're delighted to see how much people are enjoying new and returning series like Shrinking, Slow Horses, and Truth Be Told. And we have some great upcoming movies in Sharper and Tetris, along with Emmy Award winner Ted Lasso returning this spring. During the quarter, we made some great updates to Fitness Plus as well, expanding our catalog of more than 3,500 workouts and meditations to include a new kickboxing category and a new sleep theme for meditations. Our latest Artist Spotlight series features the music of the incomparable Beyoncé, and we're excited to take a stroll with guests appearing on our 5th season of Time to Walk. And we continued to build on our decades-long commitment to helping small businesses thrive when we announced Apple Business Connect. This new tool gives business owners even more control over how billions of people see and engage with their products and services every day. Businesses of all sizes can now customize key information for users across Apple Maps, Messages, Wallet, Siri, and other apps. Meanwhile, in retail, We celebrated 25 years of the Apple online store and also opened Apple Pacific Center in Vancouver and Apple American Dream in New Jersey. And I'm grateful to all the teams who helped our customers throughout the busy holiday season. At Apple, we spend a lot of time focused on creating an unparalleled experience for our customers in every product and service that we offer. We're also just as dedicated to leading with our values in everything we do. As part of that work, we strengthened our deep commitment to privacy and security, giving users 3 new tools to protect their most sensitive data: iMessage contact key verification, security keys for Apple ID, and advanced data protection for iCloud. At Apple, we feel a deep sense of responsibility to leave the world better than we found it. We're also a year closer to 2030, and we remain ever focused on the environmental commitments we set out for the end of the decade. As an example, the latest Mac Mini and MacBook Pro models all use 100% recycled aluminum in the enclosure and recycled rare earth elements in all magnets. And in a first for HomePod, we're using 100% recycled gold in the plating of multiple printed circuit boards. In honor of Black History Month, we released the Black Unity Collection, including the special edition Apple Watch Black Unity Sport Loop, a new matching watch face, and iPhone wallpaper. Through our Racial Equity and Justice Initiative, we're expanding our support of 5 organizations focused on lifting up communities of color through technology. And we are committed, as ever, to building on our progress around inclusion and diversity. During the quarter, we also announced that since the inception of our giving program 11 years ago, we've donated more than $880 million to humanitarian efforts, disaster relief, childhood education, and more. And over the last 16 years, through our partnership with RED, Apple-supported grants have helped more than 11 million people get the care and support services they need. As we look ahead in 2023, we are excited about the year to come. At Apple, we are always looking forward, always focused on the next challenge, always determined to do great things with unmatched creativity and unrivaled innovation. And that makes me more confident about the future of Apple than I have ever been. With that, I'll turn it over to Luca.
Thank you, Tim, and good afternoon, everyone. As Tim mentioned, revenue for the December quarter was $117.2 billion, down 5% from last year. A number of factors had a significant impact on our results. First, we faced a very difficult foreign exchange environment, which affected our performance by nearly 800 basis points. In other words, we grew revenue on a constant currency basis, and in fact, we did so in the vast majority of markets. Second, the macroeconomic environment this past quarter was markedly more challenging than 12 months ago. Third, we experienced significant supply shortages for iPhone 14 Pro and iPhone 14 Pro Max in November and through December. On the other hand, we had the positive impact of the 14th week in the quarter that Tejas mentioned at the beginning of the call. Products revenue was $96.4 billion, down 8% from last year due to the factors I just called out. At the same time, however, our installed base of active devices grew double digits and achieved all-time records in each geographic segment and in each major product category. We are proud to now have over 2 billion active devices in our installed base. This continued growth in the installed base is due to extremely strong levels of customer satisfaction and loyalty, and a high number of customers who are new to our products. The installed base growth also helped our services set an all-time revenue record of $20.8 billion, up 6% over a year ago. We achieved this new milestone despite more than 700 basis points of negative impact from foreign exchange. We reached all-time services revenue records in the Americas, Europe, and rest of Asia Pacific, and a December quarter record in Greater China. We also set records in many services categories, including all-time revenue records for cloud services, payment services, and music, and December quarter records for the App Store and AppleCare. Company gross margin was 43%, up 70 basis points from last quarter due to leverage and favorable mix, partially offset by foreign exchange. Products gross margin was 37%, up 240 basis points sequentially, and services gross margin was 70.8%, up 30 basis points sequentially, both due to the same factors that impacted total company gross margin. Operating expenses of $14.3 billion were significantly below the guidance range we provided at the beginning of the quarter and grew at a slower pace than in the past, as we took actions to respond to the current macro environment. Net income was $30 billion, diluted earnings per share were $1.88, and we generated very strong operating cash flow of $34 billion. Let me now get into more detail for each of our revenue categories. iPhone revenue was $65.8 billion, despite significant foreign exchange headwinds, supply constraints on iPhone 14 Pro and iPhone 14 Pro Max, and a challenging macroeconomic environment. In spite of these circumstances, we set all-time iPhone revenue records in Canada, Italy, and Spain, and saw strong growth in several emerging markets, including all-time iPhone revenue records for India and Vietnam. Importantly, the installed base of active iPhones continues to grow nicely and is at an all-time high across all geographic segments. In emerging markets in particular, the installed base grew double digits, and we had record levels of switchers in India and in Mexico. Our customers continue to love their experience with our products, with the latest survey of U.S. consumers from 451 Research indicating customer satisfaction of 98% for the iPhone 14 family. Mac revenue was $7.7 billion, down 29% year over year and in line with our expectations. There were three key drivers for our Mac results. First, we had a challenging compare against last year's launch of the completely reimagined MacBook Pros, our first notebooks with M1 Pro and M1 Max. Second, we believe that the macro environment impacted our Mac performance. And third, we faced significant foreign exchange headwinds. At the same time, however, the installed base of active Macs reached an all-time high across all geographic segments, and we continue to see very strong upgraded activity to Apple Silicon. Customer satisfaction with Mac remains very strong at 96% based on the latest survey of U.S. consumers from 451 Research. iPad revenue was $9.4 billion, up 30% year over year, despite significant FX headwinds. This performance was driven by two key items. First, during the December quarter a year ago, we experienced significant supply constraints, while this year we had enough supply to meet demand. Second, we launched our new iPad and the iPad Pro powered by the M2 chip during the quarter. The iPad installed base reached a new all-time high thanks to incredible customer loyalty and a high number of new customers. In fact, over half of the customers who purchased iPads during the quarter were new to the product. Wearables, home, and accessories revenue was $13.5 billion, down 8% year over year. The year-over-year decline was driven by significant FX headwinds and a challenging macroeconomic environment. However, our installed base of devices in the category set a new all-time record thanks to the largest number of customers new to a smartwatch that we've ever had in a given quarter. In fact, nearly two-thirds of customers purchasing an Apple Watch during the quarter were new to the product. Moving to services, we generated $20.8 billion in revenue, a new all-time record in total and for many services offerings, in spite of a difficult foreign exchange environment and macroeconomic headwinds impacting certain categories such as digital advertising and mobile gaming. In constant currency, we grew services revenue double digits on top of growing 24% during the December quarter a year ago. We remain focused on the large long-term opportunity in this category, and we continue to observe several trends that reflect the strength of our ecosystem. For example, we saw increased customer engagement with our services during the quarter. Both our transacting accounts and paid accounts grew double digits year over year, each setting a new all-time record. Paid subscriptions also continue to grow nicely. We now have more than 935 million paid subscriptions across the services on our platform, up more than 150 million during the last 12 months alone, and nearly 4 times what we had just 5 years ago. And we continue to increase the reach and improve the quality of our offerings. For instance, Apple Pay is now available to millions of merchants in nearly 70 countries and regions, and we saw a record-breaking number of purchases made using Apple Pay globally during the holiday shopping season. Finally, our installed base of over 2 billion active devices represents a great foundation for future expansion of our ecosystem, and it continues to grow even during difficult macroeconomic conditions, which speaks to the exceptionally high levels of customer loyalty and satisfaction and our ability to attract new customers to our platform. The growth is coming from every major product category and geographic segment, with strong double-digit increases in emerging markets such as Brazil, Mexico, India, Indonesia, Thailand, and Vietnam. Turning to the enterprise market, we have seen continued adoption of our services for business, like Apple Business Essentials, AppleCare, Tap to Pay, and Apple Financial Services. For example, Mars Incorporated has expanded its use of AppleCare for Enterprise to provide timely device support and assurance for iPads deployed across their manufacturing sites. Meanwhile, HCA Healthcare has leveraged Apple Financial Services to manage the annual refresh of its entire fleet of iPhones. This not only ensures that their staff stay current on the latest Apple technology, but also provides them with significant annual savings in the process. Let me now turn to our capital return program and our cash position. We returned over $25 billion to shareholders during the December quarter as our business continues to generate very strong cash flow. This included $3.8 billion in dividends and equivalents and $19 billion through open market repurchases of 133 million Apple shares. We ended the quarter with $165 billion in cash and marketable securities. We repaid $1.4 billion in maturing debt and decreased commercial paper by $8.2 billion, leaving us with total debt of $111 billion. As a result, net cash was $54 billion at the end of the quarter, and we maintain our goal of becoming net cash neutral over time. As we move into the March quarter, I'd like to review our outlook, which includes the types of forward-looking information that Tejas referred to at the beginning of the call. Given the continued uncertainty around the world in the near term, we are not providing revenue guidance, but we are sharing some directional insights based on the assumption that the macroeconomic outlook and COVID-related impacts to our business do not worsen from what we are projecting today for the current quarter. In total, we expect our March quarter year-over-year revenue performance to be similar to the December quarter. This represents an acceleration in our underlying year-over-year business performance as the December quarter benefited from an extra week. Foreign exchange will continue to be a headwind, and we expect a negative year-over-year impact of 5 percentage points. For services, we expect revenue to grow year-over-year, while continuing to face macroeconomic headwinds in areas such as digital advertising and mobile gaming. For iPhone, we expect our March quarter year-over-year revenue performance to accelerate relative to the December quarter year-over-year revenue performance. For Mac and iPad, we expect revenue for both product categories to decline double digits year-over-year because of challenging compares and macroeconomic headwinds. We expect gross margin to be between 43.5% and 44.5%. We expect OPEX to be between $13.7 and $13.9 billion. We expect OI&E to be around negative $100 million, excluding any potential impact from the mark-to-market of minority investments. and our tax rate to be around 16%. Finally, today our board of directors has declared a cash dividend of 23 cents per share of common stock, payable on February 16, 2023, to shareholders of record as of February 13, 2023. With that, let's open the call to questions.
Thank you, Luca. We ask that you limit yourself to 2 questions. Operator, may we have the first question, please?
Certainly. We will go ahead and take our first question from David Vaught with UBS.
Great. Thanks, guys, for taking my question. So, Tim, and maybe this is for Luca as well, you talked about the supply chain returning back to normal after a very difficult October, November, but we're still seeing some disruptions across tech products, whether it's enterprise or consumer-facing. How do you think about your supply chain and maybe the levels of inventory or builds that you might need as we go forward to sort of insulate your business from these sort of episodic disruptions? Have you changed your view? And if so, how does that affect, ultimately margins and sort of your balance sheet and cash flow items going forward? Thanks.
This is Tim, David. From a supply point of view, we did see disruption from early November through most of December, and from a supply chain point of view, we're now at a point where production is what we need it to be, and so the problem is behind us. In terms of going forward in the supply chain, we build our products everywhere. There are component parts coming from many different countries in the world, and the final assembly coming from 3 countries in the world, and on just iPhone. And so we continue to optimize it. We'll continue to optimize it over time and change it to continue to improve. I think when you sort of zoom out and back up from it, the last 3 years have been a pretty difficult time between COVID and silicon shortages and the like, and I think we have had a very resilient supply chain in the aggregate. In terms of supply for this quarter, which I think was one of your points, I think we're in decent supply on most products for the quarter currently.
Great, thank you.
Yeah.
Great, thanks. Can we have the next question, please?
Our next question is from Shannon Cross of Credit Suisse.
Thank you very much. Luca, I wanted to dig a bit more into the commentary on gross margin. The guidance, especially at 43.5 to 44.5, is obviously quite strong. So I'm wondering what's helping you out there, assume mix and some other things. And then, how should we think about what currency and hedging is going to do as we look forward? And then I have a follow-up.
Yeah. Shannon, yes, we've had good margin for the December quarter to start with. We reported 43%. Obviously, in December, we have the benefit of leverage because of the seasonality of the business, but we also had favorable mix across the board. Of course, foreign exchange is an issue right now. In the December quarter, on a sequential basis, foreign exchange was a negative 110 basis points for us. And on a year-over-year basis, it's 300 basis points. So obviously, the FX environment has changed a lot during the last 12 months. For March, yeah, we've seen a margin expansion, 43.5 to 44.5. We're doing a lot of work around cost, of course. The mix will continue to help, both within categories and services mix as we move away from the holiday season. But we're doing a lot of work on the cost structure, and that is paying off. Foreign exchange is still a negative, about 50 basis points sequentially, but it's mitigating. The last couple of weeks, the dollar has weakened a bit, and so hopefully, as we go through the year, hopefully things will improve. But for now, as you correctly state, we are in a good position on margins.
Thank you. And then, Tim, can you talk a bit about China? What you're seeing. Obviously, you've had the issues with production, but I mean more on the demand side. As you know, we've gotten through into Chinese New Year and the opening. I'm just wondering, are you seeing the Chinese consumer come back? What are they buying, and how are you thinking about your position there? Thank you.
Mm-hmm. Shannon, last quarter we declined by 7% on a reported basis, but we actually grew on a constant currency basis, and that was despite some significant the supply constraints that we talked about earlier, and obviously the COVID restrictions throughout China that happened in various different places throughout the country also impacted the demand during the quarter. When you look at the opening that started happening in December, we saw a marked change in traffic in our stores as compared to November, and that followed through to demand as well. And I don't want to get into January. We've obviously, for January is included in the guidance, or the color rather, that Luca provided earlier. But we did see a marked change from December compared to November.
Thank you.
Yep.
Great. Thanks, Shannon. Can we have the next question, please?
Our next question is from Eric Woodring of Morgan Stanley.
Hey guys, thanks for taking my questions. Maybe Tim, first one for you. That 2 billion installed base, device installed base figure, that's up, I believe, 200 million units year over year. That implies the strongest annual gain in new devices in your installed base, basically as far back as you've provided those data points. And so I guess my two questions are, one, can you provide the installed base for the iPhone at year end? And then two, is there anything that you see in this new cohort of users that might look different or similar to past cohorts, either by demographic or regions or monetization ramp? And then I have a follow-up. Thanks.
Yeah, the install base is now over 2 billion active devices, as you mentioned, and we set records across each geographic segment and major product category, and so it was a broad-based change. To correct one thing you said, it's up over 150 million year over year. The last report we reported to be over 1.85, and so it's 150, which we're very proud of. We also saw strong double-digit in several of the emerging markets, which is very important to us. For example, India and Brazil as just two examples. So very, very strong, and obviously it bodes well for the future.
Great, thank you for the color, Tim. And then, Luca, obviously the December quarter was negatively impacted by the production challenges. Can you just maybe unpackage where channel inventory levels are today, kind of across the iPhone broadly, and then what the data that you're seeing so far this quarter is telling you about iPhone demand deferral versus kind of iPhone demand destruction, and perhaps pushing some upgrades later into the year rather than into the March quarter. And that's it for me. Thanks.
Yeah, Eric, I'll take that one as well. The channel inventory levels on iPhone, we obviously ended the December quarter below our target range, given the supply challenges on iPhone 14 Pro and iPhone 14 Pro Max. But as you think about this, keep in mind that a year ago, we also exited the December quarter below our target inventory range because of supply challenges in the year ago quarter, not related, not the same issue, by just as a point. And so that hopefully gives you some flavor of that. In terms of what we're seeing in January, we've included in our color that Luca provided kind of our thinking. It's very hard to estimate the recapture because you have to know exactly what would have happened and how many people bought down, and it takes a while to get those reports in during the quarter, and so we've made our best guess at it. In terms of the sizing of the constraint in Q1, what we estimate, although not with precision, is that we believe iPhone would have grown during the quarter had it not been for the supply shortages. So hopefully that provides you a little bit of color.
Yep, that's great. Thanks so much.
Thanks, Eric. Can we have the next question, please?
Our next question comes from Aaron Rakers of Wells Fargo.
Yeah, thanks for taking the question. I have two as well, if I can. I guess the first kind of question, I just going back on the gross margin line, pretty good guidance into this March quarter. I'm curious if you unpack that a little bit, specific around what you're seeing as far as maybe benefits from component pricing, in the guidance, if you're embedding any of that at this point.
Yeah, of course. With our guidance, we try to capture every aspect of our cost structure, and obviously components are a big portion of that. So definitely that's included. And keep in mind, again, that foreign exchange, I mentioned earlier, I think to Shannon, that the sequential negative on FX is 50 basis points versus a year ago. It's 270 basis points. Obviously, the US dollar has moved a lot over the last 12 months. So obviously, we need to find offsets and more to the negative FX in order to be able to provide this kind of guidance. And so obviously, components are a big part of that.
Yeah. And then kind of, from a strategic perspective, given kind of the things that we're seeing out in some of your peer group, I'm curious, Tim, how you think about, the role of AI in your strategy as far as particularly in the services segment, whether you see opportunities to excel monetization abilities within the paid subscriber base, and whether or not AI is something that you're implementing a bit more strategically there.
Yeah, it is a major focus of ours. It's incredible in terms of how it can enrich customers' lives, and you can look no further than some of the things that we announced in the fall with crash detection and fall detection, or back a ways with ECG. I mean, these things have literally saved people's lives, and so we see an enormous potential in this space to affect virtually everything we do. It's obviously a horizontal technology, not a vertical. And so it will affect every product and every service that we have.
Thanks. Can we have the next question, please?
Certainly. Our next question comes from Amit Daryanani of Evercore.
Yep. Thanks for taking my question. I guess the first one I have is, Tim, I think based on your earlier comments that iPhones would have grown X the production issue that imply that maybe it's a $7 billion or so impact that you had in December quarter from the production challenges on the high-end models. I'm sure it's tough to see what happens this time around, but I think historically when you've had, production issues or things like this happen, what has the consumer behavior been typically? Do they tend to go down towards the lower-end models and get the phone they want quickly, or do they just defer their production? Just from a historical perspective, I think, do you typically recover what's deferred out, or no?
It's very hard to estimate is the real answer, because you have to know a lot of data, and it's usually only in hindsight that you have a more reasonable view of it. And so we put our best views in the color that Luca provided. That's kind of what I would say.
All right. And then, I guess maybe if I think about services as you go forward, and you've had really good growth in services, I think, over the last several years. But as you go forward in services, what do you think drives the growth more? So is it the expansion of your install base, or is it more going to be driven by, ARPU going higher for you? I'm just curious, how do you think about those two buckets as you go forward?
I mean, there's a number of things, and I've mentioned a few of them during the call. The first step is always the install base. The install base is the engine for services growth, and the fact that the install base is growing very nicely and it's growing, in a lot of emerging markets, it's growing even faster. That gives us, a larger addressable pool of customers. So that's incredibly important. The second one is that we're seeing that the level of engagement of our customers already in our ecosystem continues to grow. I mentioned that both transacting accounts and paid accounts grew double digits, and so that bodes very well for the future. And we have a lot of transacting accounts that can move to paid accounts over time. The other aspect that is very important for us is to continue constantly to improve the reach and the quality of our services. And I gave the example of Apple Pay, which it's a great example because, we started off primarily in the United States. Now we've taken it to 70 markets, millions of merchants. And so obviously payment services continue to set new highs all the time for us. And as you've seen over the last few years, we also launch new services over time, and that obviously contributes to the growth. We're very excited, and when we look at the behavior of our installed base, we think it's very promising for the continued growth of our services business.
Perfect. Thank you.
Thanks, Amit. Can we have the next question, please?
Our next question comes from Harsh Kumar of Piper Sandler.
Yeah, hey, Tim, I had a quick question on emerging markets. Seems like you're making a lot of strides in India. Potentially wanted to understand the kind of share you have in China and India, and relative to that, what would be your aspirational but sort of achievable share in iPhones in those territories, whether it's units or revenues? And I was hoping to draw on your experience of maybe what you've seen in other countries where you've had some longer presence.
In looking at the business in India, we set a quarterly revenue record and grew very strong, double digits year over year. And so we feel very good about how we performed, and that's despite the headwinds that we've talked about. Taking a step back, India is a hugely exciting market for us and is a major focus. We brought the online store there in 2020. We will soon bring Apple Retail there. So we're putting a lot of emphasis on the market. There's been a lot done from a financing options and trade-ins to make products more affordable and give people more options to buy. And so there's a lot going on there. We're in essence taking what we learned in China years ago and how we scaled China and bringing that to bear. And I don't have the exact market shares in front of me, but I think you would see that from a market share point of view that we grew around the world last quarter, on iPhone, despite the challenges that we had on the supply side. And I wouldn't expect to have a difference in those two markets.
Understood. And for my follow-up, I had a sort of a interesting theoretical question on pricing. Assuming we get the CHIP Act passed and there's a whole bunch of manufacturing that happens in U.S. and other territories that are potentially somewhat more expensive than the ones you might be in now, has the company done any studies to gauge the elasticity of demand relative to small price increases in your products?
We have experience in that, but I wouldn't necessarily draw the same conclusion that you have in terms of the cost of the product. We don't know at this point exactly what that will be, but we're all in terms of being the largest customer for TSMC in Arizona, and are very proud to take part in that. That's what I would say about that.
Okay, fair enough. Thank you, Tim.
Yeah.
Thanks. Can we have the next question, please?
Sure. Next question comes from Wamsi Mohan of Bank of America.
Yes, thank you. Tim, you've done a phenomenal job with driving consumer choice towards higher-end products within your portfolio. How would you compare this cycle for iPhones if you were to segment the Pro versus non-Pro models versus the cycles from the past few years? And do you think this move to higher ASPs is sustainable, or do you think it reverses in a tighter consumer spending environment? And I have a follow-up.
The Pro has been a 14 Pro and the 14 Pro Max have done extremely well up until the point where we had a supply shortage and couldn't provide them, couldn't provide the total of the demand. And so it's definitely a strong Pro cycle. I think there's a number of reasons for that, but the most important one is always the product. And I think the innovations in the product speak for themselves. And we feel, very good about the product that we announced back in September, and are happy to now be at a point where we're shipping to the demand.
And Tim, do you think that this move to sort of higher ASPs that has happened over the last few years is sustainable, or could it sustain in this, very tough macro environment that you've cited?
I wouldn't want to predict, but I would say that the smartphone for us, the iPhone, has become so integral into people's lives. It contains their contacts and their health information and their banking information and their smart home and so many different parts of their lives. It's their payment vehicle and for many people, and so I think people are willing to really stretch to get the best they can afford in that category.
Okay, great. And Tim, you clearly emphasize the focus and importance of the install base. If we think about the absolute growth of the install base from 1 billion to 2 billion over 7 years from a device standpoint, how should we think about the penetration of services or the growth in paying customers on services over that time frame? Is that penetration rate increasing or decreasing? How fast is that growing relative to the growth of the overall install base?
Thank you. It's Luca. So of course, we keep track of that. It's really, really important for us. Over the last 7 years, as we've doubled the install base, we've seen a growing engagement of our customers on the platform. That happens, first of all, by customers transacting on the platform, and then moving to paid accounts, so starting to pay for some of the services. That percentage of paid accounts tends to grow over time. We've seen it in developed markets, we see it in emerging markets, and that is due to some of the reasons that I was explaining earlier, including the fact that we made it easier for our customers to get engaged on the platform. For example, we offer multiple payment methods in many countries, and we've made it easier to explore for more services because we've added a lot of services on the platform over the last 7 years. So, to your question, of course, higher engagement means a higher percentage of paid accounts over time.
Okay, thank you, Luca.
Great, thanks, Wamsi. Can we have the next question, please?
Our next question comes from Richard Kramer of Arete Research, LLP.
Operator, can
and Richard,
Yep. Can we move on to the
Richard.
next?
Okay. Next, we'll hear from Jim Suva of Citigroup. And Jim, your line is open. If you can release your mute function, we are unable to hear you.
Tim and Luca, you both mentioned earlier on the Q&A a little bit about India. I was wondering if we're now entering a situation of even more opportunity because we've exited COVID, we've exited countries with different COVID criteria. We've also seen India build out its higher speed transmissions, and your market share is tremendously underrepresented there. And it appears with the supply chain, you're looking at diversifying kind of operational risk, not specific to any country, but just overall of, now you look at potentially opening up stores and stuff. Am I right that that's the way you look at it, is it's even more prime for opportunity now than ever? And once you start opening up stores there, you could just see a complete, green shoots of adoptions, or any additional commentary on your view on India as now we've navigated COVID and supply chain and so many challenges over the past 2 years. Thank you, gentlemen.
Yeah, Jim, we actually did fairly well through COVID in India, and I'm even more bullish now on the other side of it, or hopefully on the other side of it. And that's the reason why we're investing there, with bringing retail there and bringing the online store there, and putting a significant amount of energy there. I'm very bullish on India.
Thank you. And then as my quick follow-up, you had mentioned that services, not necessarily specific to India, but services overall were better than expected. And of course, supply chain was more challenged than expected. So what was the bridge factor of services being better than expected on the upside? Was it like advertising or apps or paid monthly subscriptions, or what were kind of the things that really surprised you to the upside on services? Thank you.
It was Jim, it's Luca. It was primarily this level of engagement that we saw, which then it reflects into as you said, the paid subscriptions. We saw very good results in our cloud services business, in payment services. Music was very strong. So we had a number of categories that set new records, all-time records, and they did a bit better than we were expecting at the beginning of the quarter. And so Tim mentioned it during, I think, his prepared remarks that when you look at it in constant currency, we grew services double digits, and that was on top of a 24% increase a year ago. So it's very sustained growth that we're seeing.
Thank you so much, and congratulations to you and all your teams.
Thanks, Jim. Can we have the next question, please?
Our next question will come from Krish Sankar of Cowen and Company.
Yeah, hi, thanks for taking my question. I had two of them too. First one, Tim or Luca, you mentioned how the macro did soften and it had an impact. And as consumers tighten their belt, when you look across your hardware products and service businesses, where have you seen the biggest impact and where have you seen the least impact from the softening macro? And then I had a quick follow-up.
We think there was some impact across the products and in services. Probably the ones that we saw the most impact on were Mac and wearables. You can see that in those numbers, and probably the least would have been iPhone.
Got it. Very helpful, Tim. And then just a quick follow-up on the Mac. The PC industry is expecting decline in PC shipments this year also. How to think about the Mac relative to kind of like where the PC industry as a whole is expecting the shipments to end up? Is there any color you can give on that? Thank you very much.
The industry is very challenged, as you say. It's the industry is contracting. I think from us, though, and I don't know how this year will play out, so I don't want to predict the year. But over the long run, we have a market that is a reasonable size market, a big market, and we have low share, and we have a competitive advantage with Apple Silicon. And so strategically, I think we're well positioned in the market, albeit I think it will be a little, rough in the short term.
Thanks a lot, Tim.
Yep.
Thanks, Krish. A replay of today's call will be available for 2 weeks on Apple Podcasts, as a webcast on apple.com/investor, and via telephone. The number for the telephone replay is 866-583-1035. Please enter confirmation code 6541285, followed by the pound sign. These replays will be available by approximately 5 p.m. Pacific Time today. Members of the press with additional questions can contact Josh Rosenstock at 408-862-1142. Financial analysts can contact me with additional questions at 669-227-2402. Thank you again for joining us.
There we go. Another great Apple earnings call. Very happy with that. I traded it 3 times. So very, very, very happy with my positions there today. So we're just looking now to see if we can trade it a 4th time, which would be pretty insane if we can, but hopefully we will be able to. So we'll see what happens. We've set an order for 145 if we can catch it on the way down. I've still got, as you can see, $4,229, so I'm still fully invested in the stock, as you can see. But if I can get that a bit lower, do it again, I will be very, very happy with that. So yeah, it's been a very, very good day on this one. We're just seeing if we can get it a little bit lower. We'll see. But anyway, 149. So what we did, we ran it up today. I sold it here, 10 shares, just trim off the top. I bought it back here, 10 shares. I sold it here, 10 shares. It's like perfect trade, right? And if it goes to 145, I'll buy it again. I've got a set trade to see if it goes through. If not, it doesn't matter. I've got a nice position. I'm now up. I've not been up on Apple before until today, so it pays a pretty rubbish dividend, but it pays a dividend. It's it's like $10 for the amount I have at the end of the day. So what do you think about that? If it goes down to 145, I shall be very happy. It might do it in a minute. Look at it, starting to sell off, profit taking. If it does that, that'll be absolutely brilliant. I'll be thrilled to bits. I've got the money there. It's ready to go. We will now look at the overall portfolio. Here we are. This is where we are today. Up again today. If we go over to this position here, you can see where we are. Looking strong. We're up on the year to date now, 13.8. Those you can see the $199 I've got there. That's including the buying power. See, 1,450 to buy back Apple. It's going down 149. I'm going to buy it at 145. If not, let it go. Doesn't matter. So basically, I made. This will be the 4th trade. If I get it, it'd be like just phenomenal. I'll end up with several shares for free Apple, so that'll be great. I'll be very, very happy with that. Still in the stock, still up, lowered my averages, made a profit. Great. So very, very happy with that. My overall position now is 42,425. Great. It's going down 149.20. Be awesome if it happens. I mean, like 4 trades in a row, back to front, back to back like that. 149.10. It is giving it up. It is giving it up. So let's have a look. I decided to do it that way because if we look at the S&P, it's been going sideways during that, so there was nothing there really to pick up. I'm up 6.5%, very strong. Virgin Galactic's been going sideways. Tesla, I'm waiting to buy that down. That's going sideways at the minute. Apple, if it goes back down, look, 149. Go on, another $4. We'll be right there. Amazon missed on earnings, but they've gone up. So obviously their guidance was great. Their guidance was obviously good. I don't know what the guidance was, but I'm happy with it. I'm happy with it. Maybe sell off Friday. Well, that's why I've got the order set for 145. Let's see what happens. McDonald's going sideways. Coca-Cola, 149.48 now. It's going down. J&J, Google also missed on earnings tonight by quite a bit. 105 should have been 120. But remember, the analysts set these aren't targets set by the company. So that's looking strong. That's gone up. So everything's looking pretty good. Jez West, I never heard back from Jez West, so I don't know what you want me to do as far as your wife's 50th birthday. Let me know what you want to do. It's a members perk plus tips for songs if you want me to do a concert for you. Anyway, it's going down one. Sorry, what have I missed? Oh no, I was just asking. I didn't hear back from you what you wanted to do. If you wanted to book a concert, it's a members perk plus tips for songs. If you wanted me to do a 20-minute 20-minute or 10-minute concert for your wife's birthday, I can do that. It's a membership perk plus tips for songs. So if you want to do that, it's one way you can book me, and then you can keep the video as well. So there you go. It's a good deal. People pay me. I've joined. You're not. Are you a different account then? You're showing. You don't have a badge next to your name. So Jez West, you're not showing that you're a member. Can you see it's not showing as a member? Have you got a different account? But it's showing you're not a member. So I don't know. That's why I said you need to join. But it's not showing as you're a member. But it's a members perk. A silver perk member, you get a 20-minute fundraiser. This isn't a fundraiser, of course. It's a birthday, but you get it if you want to tip me if you're a bronze member. Okay. Anyway, let me know because I need to set it up, and I need to confirm if you want to do it or not, and arrange time tomorrow night. So I need to know if you want to do it. Here's the invitation to join. He says, I've joined, I'm trying. Okay. Anyway, let me just come back to my stocks a minute. J&J going up. Google's going up quickly. That's gone down well. That's going up. Amazon still going up. Apple, we're waiting for a 145. Hopefully it will go down there. There's no point me paying any more. I could buy it back now. It makes the difference because I've made the profit anyway. I sold it here, bought it here, sold it here. So if I buy it there, I'm not out of the money. I'm still in the money. But I don't need to. I've got 4,000 shares, and that'll expire in the morning, and we'll look at it again tomorrow. See if we can get it lower tomorrow. But I'm not going to pay it any more than 145. Seriously, I'm trying. It's not letting me. I don't know why. I don't know why. The only reason sometimes people have a problem is if you click the link, there's no reason why not. If you might have an account set for a child, or you've got restrictions on your account, or anything like that. I don't know what to tell you. But anyway. If it's a complication, if for some reason it's difficult, you can just do super chats for them. You know, do it that way. If it's a problem for you, I don't want to make it difficult. Are you able to do a super chat? Is your account registered? See if you can do a 99 pence super chat. See if your account is able to use. See if your account is not restricted. It might be you've got a restricted account. Might be that. Anyway, we're watching Apple go down. Let me just check a couple of things here a minute. If you've just tuned in, we had a really big show. We had 429 through the stream. We've gained 6,210 subscribers. Awesome stuff. And awesome. If you've just tuned in, please click subscribe, ring the bell. I think we're going to end the show there. I'm just waiting. I'm just holding for a moment for the benefit of Jez West. Still going down. If we hit a 145, I'll be thrilled to bits. Then I'd have made the money 3 times. So there we go. We're just going to give it a few seconds to see if we can... God damn it. It's going to be a red day tomorrow. Just subscribed. Anis Abdallah, you think so? Okay. May well be. We shall see. But I've got plenty of room now in my stocks because I've been trimming, taking profits. Let's see if it goes down to 145. It's not doing it. Could you not do a super chat either? Can you not do a super chat? That must mean your credit card is, I don't know, got an issue with Google or YouTube. I don't know. Anyway, bye everyone. Have a safe evening, everyone. Stephen, look forward to seeing you tomorrow, mate. We're just waiting to buy Apple again at 145. If we can get Apple for 145 again, I've had a great evening. I'll try. Okay, Jez. 4 times in a row. That'll be the 4 trades in a row if we can pull it off. Let's see if it happens. Just going to give it a couple of moments. And then we're going to get off. I've set a buy anyway. I've set a limit order. Let me go back to Apple. Here it is. Here's the limit order. Let's clear the ticker for a moment. Super chat time. Super chat time. MSK. Jez West wants to book me for a private event, and it's a members perk. And he's just trying to get his super chat to work. He's having a little bit of an issue with it. But anyway, let's have a look. So I've got my order placed here for 145. 10 shares at 145. So let's see if that goes through. It's at 148.20 right now. We're waiting to see if it goes through. You tell me how much, bruv. MSK, what do you mean? Super chat time. You tell me how much. What do you mean? What do you mean? Why are you asking me how much? I don't understand the question. You're asking me to tell you how much to give me as a super chat. I don't know. I mean, if you want to tip me, that's fine. I can't ask. I can't tell you, can I? I mean, what sort of question is that, MSK? Anyway, we're wrapping up the show. I'm not sure what you mean. We were just hanging on for Jez West. Jez, are you on Discord? Send me a message on Discord and let me know what you want to do. If you want to book me for tomorrow night. Okay, I will decide. I have no idea what's going on. I think MSK wants to give me a tip. I don't really understand the question. Anyway, there's Discord, Jez. Are you already on Discord? Send me a message and or you'll be in the show tomorrow. But I need to know if you want to do it for tomorrow night. I am available. You can book me if you want to. So let me know. But I think we're just about going to get off. Nothing is working. Jez West, I have no idea. Then that means your account you're signed in with is restricted. It might be if you have a family account, do you have children, and maybe you've got a restricted account that has your children on it, and it's a YouTube channel for content for children. It might be that. It's probably that. So what I suggest you do is create another Google account, another Google YouTube account, and just have it set for adults only, and that way it'll work. It's probably that. It stops your children using your credit card. That's probably what the reason is. Anyway, We're holding for a second. We've got 250 to go. If it goes to 145, no, I'm not on Discord. Okay. I don't know. That's the only way I can confirm it's you. Or just come in the chat tomorrow and tell me and let me know what you want to do. I am free tomorrow night, or at least I can be made available if you want to book me. MSK has just given me a super chat. That's very kind of you. What was that for? What was the super chat for? That's very kind of you. Thank you very much indeed, MSK. What was that for? Thank you so much indeed. I'm glad you enjoyed the shows, and it's very, very kind of you. It's been a good day. Well, thank you very much. Thank you. We've made a lot of money, right? Everyone's made a lot of money. There we go. Super chat from MSK. I really appreciate that. That's very, very kind of you. There you go. Maybe you should, it's Jez West's wife's birthday tomorrow. It's her 50th birthday. And he wants to book me for an Elton John concert for his wife, sing happy birthday and so on and so forth, but he can't get his super chats or his membership to work. So maybe MSK, you could book me for an event tomorrow for Jez West and then sort it out with him afterwards. I have no idea. Anyway, it's all right for some people being able to give a super chat. For me, no, for God's sake. What's going on? I don't know, Jez. What have you done? Have you broken YouTube? Looks like you've broken YouTube. I don't know what's going on. Anyway, Jez West, thank you ever so much for that. I appreciate it. I think we're going to have to get off now anyway. Celebrate. This is for Jez West. Sorry, MSK. Thank you very much indeed. Here we go. Boom. There we go. Cheers, mate. Thank you very much indeed. Cheers. That was really, really kind of you. 145, we're trying to buy Apple back for the 4th time in a row tonight. We literally, I'll share with you on the screen, Skyworks on sale. Skyworks, as AC Borg. Share the love. Thank you ever so much, MSK. I appreciate it. And your memberships and your support keeps the live shows going. It's why I'm live 10 hours a day for you guys. So there you go. So, to recap, we bought in here. Let me just see if you can actually see me doing that. Can you actually see if I do that? I just thought about that. Can you actually see my mouse on the screen? Yes, you can. Oops-a-daisy. Yes, you can. So, I bought in, let me go back to Apple. This is what I did. I bought here. Hang on, that's what I meant to do. I had it here. We ran it all up. We had an 8% swing. I sold it right at the top, 10 shares. I kept my other 28 shares. So I had like 38. I sold 10. Bought it back here. The 10 shares I sold. Sold the 10 shares there. And now we're trying to buy them back down at 145 again. It might happen in the morning. It might not. It doesn't matter. Whichever. I've got 28 shares. The position I hold is great anyway. If it goes to 145 in the morning, I'll buy it back. Otherwise, I've got $1.5 grand in cash. It'll run out tonight, and then in the morning we'll look at it. I'll reset it in the morning and see where we go from there. So there we go. All right. That's it from me. Thank you very much indeed, everyone, for being here. It's time to rock and roll. Jez, let me know what you want to do tomorrow, and hopefully we can sort it all out one way or the other. The wedding that you mentioned, the wedding that you mentioned. The wedding that you mentioned. What's that? What do you mean? We've had weddings. I've done weddings on the show. Yes. I have done weddings. I've sung at people's weddings. They've had me on a big screen at their wedding, live on the show. Yeah, I could sing Andre Bocelli and Pavarotti and all those wonderful wedding songs. I've done that live on a show. Anyway, I think we're done. So it's time to get off. Or did I hear wrong? LOL. I think we're getting confused, right? I think we're getting confused a little bit, MSK. Thank you so much for your support. We'll continue the chat tomorrow, but I think we're done right now. So thank you ever so much, everyone, for joining me. We had a good run. Let's have a little look. Let's go back to this screen up here. Apple's over there. We're waiting to see if we can get it at 1:45. Any more questions here on... I'll try. Okay, yeah, I'm sure you can work it out. I think it's all to do with the account that you've got. If you log back out, Jez, log back in again with a different account. It's obviously this a family account. You've probably got kids, right? Have a great weekend. I'm back tomorrow. I'm back in the morning for the opening bell. Okay, so I think we're all done. Let me just wrap up the show. Yes, let me refresh that a minute. Yes, we're all done. Okay, Coin the Crypto Discord. Join the Crypto Discord. Thank you very much indeed. I'm not going to mention it, Ali here. We'll mention it again tomorrow. We've got all our usual audience tonight, so I don't want to repeat that tonight. Ali, if you've got 5 minutes, if you want to call me, I'm available. In the morning, don't forget it's our Twitch giveaway tomorrow morning. If you don't know that yet, subscribe using Amazon Prime Gaming, and we give away the money I make in subscribers. I notice we've got someone on Twitch right now who's commenting. So there's the Twitch. If you use Amazon Prime Gaming, yes, I'll join. Yes, Ali, I'll join. There we go. MSK is interested in your Discord. The Crypto Challenge, MSK. I'm point you to all the playlists on our channel. If you look at our channel, I will share with you the on the homepage of our channel. You'll see the playlist, which is called the Crypto Challenge. Have a look at that, and you'll see more information about what me and Ali are doing together. All right. Okay, that's it from me. I think we're going to see Apple back down again at 1:45. Love to everyone. That's it. Roll the credits. Let me roll the credits. Here we go. I'm going to get out of here. It's been a very long day, as it is every day, right? My wife never sees me. She thinks I live in here. I'm a permanent fixture of my studio. So anyway, let's roll the credits. Here we go. Roll the credits. Let's get out of here. Sound effects are coming in. That's it. Raise the volume a little bit. There you go. And super chats. MSK. Subscriptions. Vogli Vega. Francesco Ursamando. Thank you so much indeed for all of that. Awesome stuff. Thank you very much indeed. See you back in the morning for the opening bell. See how the markets react to all these things. You can see how we've grown today. Awesome stuff. There you go. And there is Apple. Let me bring you onto the Apple screen. And let's say goodbye and let's get out of here. There we go. Love to everyone. Let's get rid of our earnings ticker. Get rid of that one there. I will update that with all the requests that you made. And that's it. Thank you very much indeed. Apple is still going down. If I get it for 145, 147.18, 147, 146, 146.95, 146.92. Go, Apple. Right in at the last moment. I'll be thrilled to bits. 146.83. Come on, all the way back down. 4 trades in a row. 4 perfect trades. 146.99. Is it going to do it? 147. I could be here all night. Let it do its thing. 147. I think it's going to go to 145. And then I'll be back in again. Now, you might say, why are you paying 145? It was 123. Doesn't matter. Every time I swing it, I make a swing of, 8%. And now I'm making swings of, 8% over and over again. So 4% down, 4% up, 8% swing. 4 times in a row. It all adds up to a couple of free shares. I'll get Alexa to sing Benny in the Jets. Yeah, do that. Doesn't cost you anything, does it? Brilliant. That's what you want to do, Jez. I never caught your eye. Oh, I heard the Tiger performance. Yes, we need to do that for you. And we need to do that for you. So we can do that in an after-hours show as well. MSK, I do my after-hours shows on Fridays. So tomorrow night, maybe we're doing a Jez West birthday concert with Elton John for his wife, and then we can do at the end we can do Eye of the Tiger for you. Yeah, we keep missing you. Anyway, hopefully tomorrow night. Don't worry, I am kidding. No, please. That's it from me. It's going down again. See you all back in the morning. Until then, take care of yourselves and each other. Bye-bye for now.